So the markets are not in a very good place for the last few weeks. There have been a lot of turmoil in the markets because of tariffs. Different tariffs are being proposed at different points in time, causing a lot of volatility. So this is actually a concern for many investors, and as an advisor to many of my investors, I get calls. What is that we need to do? Is this the right time to buy because the markets have fallen? Is this the right time to sell because maybe the markets will go down further? Or should I just hold and do nothing and wait for markets to recover? So I have an answer to all three questions, which I will cover in this video. Primarily, people who are asking me whether I should buy or not, the simple answer is, do you have 5 years that you can put this money aside? Because irrespective of the market condition, a 5-year time frame, make sure that you're not inclined to lose money, because as time passes by, equity markets compound. So if you have money to buy, then sometimes the best option is to buy during the dips. However, most of my investors are not beginner investors. They have some experience with the market, and it's a dual-edged sword, because on one hand they do understand that market dips are an opportunity, but being experienced investors, they often are generally fully invested, and there are only few who have ready cash available that can take opportunity of buying in the dips. So if you are one of those investors where your risk appetite allows you to hold that money for 5 years, and you are able to put that money aside for 5 years and you have ready cash, certainly buy. The other part is, of course, asset allocation. And asset allocation means that you can shift some of your assets from a low risk return product like a fixed income to a higher risk, higher expected return product like equity. That transition can happen based on your risk profile, but definitely you should be comfortable with the transition. The second set of investors, they ask me, should I just hold? And what's the problem with that if I just hold? Often what I have seen is people who are willing to hold, they are looking at some sort of a break even, that as soon as the market breaks even my investment, where whatever is the original amount that I've invested, it's close to that, I will exit the market. That's actually not a good idea, because when you're holding because you just want to break even on an investment, it's not you're not able to earn from that investment, right? So having a break even mindset towards market would not be rewarding. So what you should definitely try to do when you're holding is hold it for that 5 years that you have promised yourself that you're going to keep this money aside. The last category of investors is really, should I just exit? Like, should I sell and maybe I'll get even a lower price point, or maybe I can time it better at the bottom? The first argument is that it's very difficult. I mean, even for professional investors, they very seldom get it right in terms of a market bottom or a market top. And based on my 20 years of career, I think it's a handful time that I've seen investors consistently do this. So it's not a very good strategy. Typically, when people are asking this question whether I should sell, there are generally two main reasons. First reason is that they have some untimed expenses that they have not foreseen, and they just want to get that money out before the money sinks even further. So that is definitely a problem with cash flow management. It's a problem with the fact that they have unforeseen expenses, and they're worried that in a short period of time they might even have even lesser amount of money to meet those expenses. So it's kind of a distress sell. The second reason really is that when you are wanting to sell, it just means that you're not comfortable with what you're seeing happen in the market. And what does this really mean? This means that your risk profile and your investment portfolio, they're not aligned, which means that it's causing you more distress looking at your portfolio overall than what you're comfortable with. And in such a scenario, it's really again a problem with the way you have measured your risk profile versus what you've actually invested. Usually make sure that you have sufficient amount of time with the markets. It's very difficult to time the markets, so if you have any of these questions, like whether you should buy, whether you should sell, or whether you should hold, it is very important to do it in the context of your risk profile and the context of your investment horizon. And this is really the job of a qualified investment advisor, to walk you through your options and make sure that you are working towards the goal that you want to achieve with your wealth. So thanks for watching, and do keep your questions coming in the comment section. If you're one of these 2-3 investors where you have your specific question with a particular example, we can certainly take it up as a live, or take it up as a discussion point for another time. But I hope you are able to understand which investor you are among these 3 and take your decisions forward.